In a move that has sent shockwaves through global markets, President Donald Trump has reignited trade wars by imposing sweeping tariffs on major U.S. trading partners. Effective March 4, 2025, the U.S. has levied 25% tariffs on all imports from Mexico and Canada, excluding oil and energy products, which are taxed at 10%. Additionally, tariffs on Chinese imports have been increased by 10 percentage points, bringing them to 20% above their January levels. These measures have been justified by the Trump administration as necessary to curb illegal immigration and drug trafficking, particularly fentanyl, and to bolster domestic industries. The immediate impact has been a surge in the effective U.S. tariff rate to 17.8%, the highest since 1937. This has led to increased costs for U.S. consumers and businesses, with retailers like Target and Best Buy warning of imminent price hikes on electronics and groceries. Internationally, the response has been swift. Canada has retaliated with 25% tariffs on a wide range of U.S. goods, including cars and beef, and is challenging the U.S. measures through the World Trade Organization and USMCA rules. Mexico has announced plans for its own countermeasures, while China has imposed tariffs of up to 15% on U.S. agricultural products and banned exports to 25 U.S. firms. The stock markets have reacted negatively, with shares of major automakers and electronics companies falling due to concerns over disrupted supply chains and increased costs. The ripple effects of the tariffs are being felt globally. The International Monetary Fund has slashed its forecast for global growth to 2.8% for 2025, citing the impact of the U.S. tariffs. The U.S. Federal Reserve has also cut its growth outlook and raised its inflation forecast, anticipating an average inflation rate of 2.7% this year. In Europe, investment banks warned that the tariffs could derail economic growth, particularly in export-dependent sectors like automotive and manufacturing. In California, Governor Gavin Newsom's administration projects a $16 billion reduction in the state's budget due to the economic impact of the tariffs. The political landscape is also shifting. President Trump's use of the 1977 International Emergency Economic Powers Act to impose tariffs without congressional approval has sparked legal challenges and raised concerns about executive overreach. However, with a Republican-controlled House and a Supreme Court historically reluctant to limit executive power in foreign affairs, significant checks on the president's trade policies appear unlikely in the near term.